Good day. Good evening. I'm not sure if everybody can hear me. I'm having a bit of a network issue here. Can somebody please confirm if you can see, if you can hear me? If you can see me, if you can hear me, please confirm in the comment section. We are having a bit of a technical issue here. We do apologize for the inconvenience. Please let me know if you can hear me, if you can see me, so we can proceed. I don't know what's wrong. Can hear you. All right, great. Thank you guys for joining us today. I do apologize again. We had a bit of an inconvenience. I do apologize. Please do forgive me for that. But then again, happy new month, happy October, 10th month of the year. Yeah, the year is already, it's almost over, guys. What an incredible year it has been. What a profitable year it has been. I welcome you all. Welcome to our first live trading session, October live trading session. What a good way to start a month. Congratulations to the ones that are in our Telegram group. We had a very profitable day today. It has been a beautiful day. We had a beautiful sell on Nasdaq and we killed it, all the way to take profit 3, just over 150 pips. So that was a great trading day. Hope you guys did profit with me. Looking forward to another profitable day tomorrow, and hopefully we can get opportunities this evening and then start have some profitable trades this evening. All right. Again, welcome to our live trading sessions. Before I begin, I just want to give out a disclaimer that any opinion, any news research, any prices analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute as investment advice. All right, it does not constitute as investment advice. If you are looking for any investment advice, please make sure that you speak to an accredited or a regulated entity or key individual with the regulatory body in your country. If you are in South Africa, please make sure that whoever that you speak to is part or is regulated by the FSCA. All right, now let's proceed. And as usual, you guys will be eligible at the end of this session to receive a 100% deposit bonus after attending this lesson. Use the promo code that I will give at the end of the session to double your deposit and maximize your profit potential. I will share the promo code, as I said, at the end of the session, so please stay tuned. So if you deposit a $5,000, you get 100% bonus. So that means your margin, your free margin will be $10,000, courtesy of Octa. Amen. Oh, by the way, shout out to the new branding for Octa. Isn't it amazing, guys? We are no longer Octa FX. It is now just Octa. Isn't that amazing? Because we're just, as you grow as a business, you need to you need to expand. We're no longer just focusing, Octa FX is no longer just focusing on Forex alone. They focus on other instruments. So they've decided to move from Octa FX to Octa. Shout out on the new branding. It looks amazing, guys. If you agree with me, give me some fire emojis in the comment section. Please give me some fire emojis. Give me some cash emojis in the section. All right. How do you join the Telegram group? The link will be shared. If I can ask the moderator to please share the South African Telegram group, can you please share the link in the comment section so that whoever is not in the Telegram group can join us and profit with us daily. All right. For those of you that are joining me for the first time, let me just do a quick introduction of who I am. My name is Isaac Izy. I am a professional Forex trader with just 10 years of experience. I am the founder of the academy called Flexi Forex Trading College, and we have trained over 5,000 students since our inception, and we have held over 300 Forex seminars throughout the Southern African region, and we provide new traders with proven strategies and empower them to succeed. Our passion is to simplify Forex trading, that everyone that puts their mind and dedication into the market can learn how to trade the Forex market. That is our passion. We try to simplify Forex trading, and that's what we're going to be doing today. I'm going to simplify it for you. I'm going to give you guys some concepts, and then we're going to head over to to the charts, and then we'll start looking at some opportunities so you can see exactly what I am talking about. All right. Before we get into it, before we get to the business of the day, can you guys just tell me where you are tuning in from? Just give me your name, the country, and the city where you're from, and also if you are a beginner or you are an advanced trader. Please let me know. If you're an experienced trader, if you are a beginner or you've never traded before, please let me know in the comment section. Give me the city where you're from, the country, as well as if your name, as well as if you're a beginner or you're an advanced trader, so I can know the audience. All right, so I can know the audience, so when I give out the information that I'll be giving out today, I know exactly who I'm giving it to. All right, so I'll give us just 2 minutes to do that. Give me, if you guys can share with me where you guys are tuning in from, as I go and get my water. All right. Yes, and the link for the Telegram channel is shared there. Can we please just click the link there if you're not in the Telegram channel? All right. Okay. You know what they say, drink water and mind your own business. Drink your water and mind your own business. I really didn't want water. I just wanted to flex my Octa water bottle. I just wanted to flex that. I just wanted to flex that for you guys. Shout out to Octa for giving me this beautiful water bottle. I wish I can get more merchandise from Octa. I wish I can get more merchandise. I'm waiting for the summer merchandise, Octa. POV. I'm waiting. All right, I see we have Rana all the way from Nairobi, Kenya with some experience. We have Jabulani Mabena, where are you tuning in from? Are you a beginner or are you an advanced trader? Do you have some experience? We have Johannes all the way from Pretoria, South Africa, a beginner. Welcome, Johannes. We have Rita Achilles all the way from Brazil. You are a beginner. Shout out. Where in Brazil are you from? I was in Rio not so long ago. I was in Rio de Janeiro. Where are you from in Brazil? Great, you're a beginner. We have Mandla from Midrand, Johannesburg, a losing beginner. Hopefully that will change as of today. All right. We have Mowish as a professional, Johannesburg, not a beginner. South Africa, we have King Mabena. We have Amanam Matilda all the way from Nigeria. Where in Nigeria are you from? We have Mr. Tabelo Munyai from South Africa, Limpopo. a beginner. We have the Thandile from Tsitsikamma, Eastern Cape, and we have Aaron all the way from Ghana. We have Sandile from Durban, Sandile Ngubani. Shout out everyone that is here. You are all welcome, and hopefully we're going to have a great time together. We have Rita all the way from Parana, From Parana, is it Parana or Parana? All right, I believe it's Parana. It's pronounced Parana. All right, let's get to it. We have Javadi all the way from India. We have Kiwu from Habalatsane, Northwest in South Africa. I've blown my account on Euro USD short. I'm a beginner. We have Lindy from South Africa, pure beginner. All right, great. I see a lot of people are beginners here, and hopefully I am going to simplify Forex for you today. We have Destiny all the way from Edo in Nigeria. Okay, today, so we're going to be discussing and these are basic concepts, and if you understand them, they will help you in your trading journey. This is the foundation of what Forex trade. We have all the way from Pakistan. Welcome. So, number one is today we're going to be discussing understanding candlestick patterns. We're going to discuss single candlestick patterns. We're going to discuss dual candlestick patterns, and we're going to discuss triple candlestick patterns and what are the importance of the candlestick patterns and what to look out for. All right, and number two is we're going to be discussing understanding key levels. All right, this is a secret to my trading strategy. This is a secret. It's the core foundation of my trading strategy, what we call 00s and 000s. If you've attended my sessions before, you'll have an idea of what we're talking about. Today, I'm going to dive more into details on that. And then number three, we're going to discuss using key levels with candlestick patterns on how we combine the two. All right, using candlestick with key levels on how to combine them to get an edge in the market. And we're going to discuss where to set your stop losses and where to set your where to set your take profits and your stop losses. Are we together? All right, we have Jabulani Mabenaja, pure trader, pure beginner, but losing. All right, hopefully that ends today. So, number one, as I said, we're going to speak about understanding candlestick patterns. All right, this is what we call Japanese candlesticks. All right, Japanese candlesticks are used to describe the price action during that given time frame. Japanese candlestick can be used for any time frame, whether it be 1 day, 1 hour, 30 minutes, 1 minute, 15 minutes, 5 minutes, daily, weekly, whatever time frame you work. Those are just indicators to describe what price is doing in that particular time frame. As I said, today we're going to be discussing three types of candlestick patterns: the single candlestick, dual candlestick, and triple candlestick patterns. Are we together? If you are with me, you know I love money, so let's put money emojis. Let's put those dollar emojis. Let's put those dollar emojis. I will start. Let's put those dollar emojis. Let's put those cash emojis so I can know that you are with me. All right. Now let's move on to single candlestick patterns. When this type of candlestick patterns appear on a chart, they signal a potential market reversals. All right. This type of candlesticks, when they appear on your chart, whenever you see them appear on your chart, they signal a potential reversal. Now, keyword potential. It is not confirmed that it is a reversal. It is a potential. That's why we use them with a confluence with other concepts or other patterns to make an informed trading decision. So today's single candlestick patterns that we're going to be discussing, we're going to be discussing the hammer and the hanging man. We're going to discuss the inverted hammer and the shooting star. Without wasting any more time, let's get into it. Now, as you can see here, we have an example of a hammer and what we call a hanging man. Now, the hammer is a bullish reversal pattern. This is the hammer. It is a bullish reversal pattern that forms during a downtrend. You will find this type of a candlestick in a downtrend and usually at the end of a downtrend. It is named because the market is hammering out at a bottom. When the price is falling, hammers signal that the bottom is near and the price will start rising again. So if the market is in a downtrend, and if you do not understand trends, please refer to some of my previous webinars where I've discussed market trends so you can understand uptrends and downtrends. And I believe that as time goes by, I'll go back into that teaching and make you guys understand what are the characteristics of an uptrend, what are the characteristics of a downtrend. But for the purpose of today, I will just assume you all understand what trends are, all right? So as I said, a hammer is usually found in a downtrend, and it's usually represents that the market is about to return and start to form an uptrend. The market is hammering down the bottom, all right? So what happens is the market will open there, it will go all the way down, and the market will the buyers will start pushing the price, and that's what we also call a rejection. So they will reject the market at this price. So it means now the buyers are now starting to come into the market. There is an influx of buyers, and that's when we will see that the sellers are getting exhausted and the buyers are coming in. The long shadow, this is a shadow, all right? This tail, it's called a shadow, indicates that sellers pushed price lower, but buyers were able to overcome the selling pressure and they closed near the open. Just because you see a hammer form in a downtrend doesn't mean that you automatically place a buy order. More bullish confirmation is needed before it's safe to pull the trigger. A typical example of a confirmation would be to wait for the white candlestick to close above the open of the open to the right side of the hammer. All right. So another confirmation you need is that after this hammer, you need a bullish candlestick to open and close above the open of the hammer. All right. That can signal a confirmation that the buyers have now kicked in. All right. Now, how do you recognize a hammer? Number one is the long shadow is about 2 or 3 times the size of the body. Now, this shadow is usually about 2 or 3 times the size of its body. That's the first characteristics. Number 2 is there is little or no upper shadow. There's usually just a little shadow or a tail at the top, or no shadow at all. All right. The real body range is at the upper of the trading range. All right. And the color of the body doesn't really matter, whether it's black or it's white, it really doesn't matter. But it's a small body, followed by a tail that is 2 or 3 times the size of the body. That's what characterizes a hammer. All right. Now, on the other side, we have a hanging man. A hangman is a bearish reversal pattern that can also mark a top or a strong resistance level. When the price is rising, the formation of a hangman indicates that the sellers are beginning to outnumber the buyers. The long lower shadow shows that the sellers pushed price lower during the session. Buyers were able to push the price back up, but at some point the sellers overcame the buyers. But then this is an indication that the buyers are getting exhausted and the sellers are trying to kick back in. That's why we see over here the market has been going up. The candlestick opened there. The sellers came in with an influx into the market, although the buyers pushed a bit near the open of that candlestick. But then this is also an indication that the sellers are now about to jump into the market. All right. Now, how do you recognize a hanging man? It's similar to the hammer, but this now happens in an uptrend. The shadow is usually 2 or 3 times the size of the body. There's usually a little shadow or no shadow at the top of the candlestick. The color of the candlestick of the body doesn't really matter. Are we together? Do we understand the difference between a hammer and a hangman, and where do they happen in the market? Whenever you see this type of a candlestick in a downtrend, it may signal a reversal, but you need a confirmation of another bullish candlestick to indicate that the buyers have now kicked in. And also, it's important where it happens. It usually happens at a support area, or at a support zone, or at a key at a key level, all right, of which I'm going to show you an indication of what that looks like. And then when we have a hanging man, it's in an uptrend, usually at a resistance area, and then it must be followed by a bearish candlestick that closes below the open of that hanging man, all right. And also, again, it happens at a resistance area, or at key level, or at a zone, and then it signals that the buyers are now getting exhausted and the sellers are now coming in. If you do understand that, can I see some cash emojis? Can I see some cash emojis if you understand the hammer and the hangman? Now let's proceed to the inverted hammer and the shooting star. I'm sorry, guys. I have a bit of a tingling thingy on my throat. I don't know what's going on. It's a bit cold in South Africa. It's hot, so it's hot as cold at the same time. So my body is really just, and I just came back from Dubai, so my body is really trying to adjust to all this crazy weather changes. All right, now let's move on to inverted hammer. All right, the inverted hammer occurs when the price has been falling, suggests that the possibility of a reversal. It's a long upper shadow that buyers try to bid the price higher. Now the inverted hammer looks more like the hangman, but the opposite one. All right, as we can see, we are in a downtrend. The market opened there, the buyers came in, the sellers tried to push the market down. They closed below, near the open of that candlestick. The body really doesn't matter. There is a small shadow. Oh my bad, there is a small shadow that side, and then it's followed by a bullish candlestick. That is also an indication of a reversal, that the buyers are about to kick into the market, and the market will change direction to the upside. And then here we have a shooting star. A shooting star is like a hammer, but that happens in an uptrend. So it's like an upside hammer. So in an uptrend, we have the market get into a resistance area. The buyers pushed the market up. The sellers came in and pushed the market down, closed near the open of that candlestick, and it was followed by a bearish candlestick to confirm that now the sellers have kicked into the market. And we usually call that a rejection. All right, we usually call that a rejection. It is an indication that the market, the buyers are now the buyers are exhausted and the sellers are about to kick in. All these four candlesticks are pretty much the same thing. Two happen in a downtrend, and two of them, they occur in an uptrend, and they all signal a reversal. This is not a continuation, it's a reversal, but it's important to note where they happen. So it's important to know that the hammer and the inverted hammer, they happen in a downtrend. The hanging man and the shooting star, they happen in an uptrend. Are we together? Please give me some fire emojis if you do understand that, if you get a concept of how these things work. And then we're gonna get to the charts, and then I'm gonna show you how it really just all together come together and works together. All right, now let's go to dual candlestick patterns. We are running a bit out of time because we started a bit late, but I'll try to be as fast as I can. If you miss out anything, you can always go back to this webinar and rewatch everything. This will be saved on the Octa YouTube channel, so make sure that you can always go back and refer to it if you have missed anything. Now, dual candlestick patterns, This what we looked at was single, so it's a single candlestick. Now when we look at dual, it's two candlesticks. It's a pattern that is formed by two candlesticks. All right. When these candlesticks appear, they usually signal a potential market reversal. Remember, keyword potential. It is not a guaranteed reversal, but it's a potential. All right. The two basic candlestick, dual candlestick that we're going to discuss today is the engulfing candlestick, the bearish and the bullish, and we're going to discuss tweezer bottoms and tweezer tops. All right, let us start with engulfing candlesticks. Let us start with engulfing candlesticks. So we have a bullish engulfing candlestick and we have a bearish engulfing candlestick. Now let's start with the bullish. The bullish engulfing candlestick is a two candlestick reversal pattern. As you can see there, we have 1, 2 candlesticks. All right, that signals a strong up move may occur. This happens in a downtrend, and it signals that I do apologize for that. It signals that the market may now reverse to the upside. Are we together? It happens when a bearish candlestick is immediately followed by a large bullish candle. You can see here we have a bearish candlestick in a downtrend, and then it is followed by a large bullish candlestick that engulfs. You see, it engulfs the bearish candlestick. All right, the second candlestick engulfs the bearish candle. That means the buyers are flexing their muscle that there could be a strong up move after a recent downtrend or a period of consolidation. All right, so in a downtrend or in a consolidation, we see that the buyers are engulfing the sellers. It means that the market will start going to the upside. On the other hand, we have the opposite, which is called a bearish engulfing. It happens in an uptrend where the bullish candlestick is followed by a large bearish candlestick, which engulfs the bullish candlesticks. All right, it means now the sellers have overpowered the buyers and there will be a strong move to the downside. Are we together? Do we understand that? These are really simplified candlestick patterns that you will see them often. These are the most common candlestick dual candlestick patterns that you will see them most of the time at any reversal. At a reversal of a trend, you usually see these two candlestick patterns, a bullish engulfing and a bearish engulfing. All right, do we understand that? So with the bullish candlestick, a bearish candlestick is followed by a large bullish candlestick engulfing the bearish candlestick, and in a bearish engulfing we have a bearish candlestick engulfing the bullish candlestick. All good? All good. Now let us move to tweezer tops and tweezer bottoms. All right. Tweezer bottoms and tweezer tops. Now the tweezer patterns are two candlestick reversal patterns. So this type of candlestick pattern is usually spotted after an extended uptrend or a downtrend, indicating that a reversal will soon occur. There are two types of tweezer patterns, the tweezer top and the tweezer bottoms. Notice how the candlestick formation looks like a pair of tweezers. Do you see that? I'm sure if there's females here, they will know what I'm talking about. You know what a tweezer is. To the gents, please go and Google what a tweezer is. I know you don't know what a tweezer is. Okay, I know you don't know. So please make sure that you go and Google what a tweezer is. You will see it looks exactly like those candlesticks. And I'm not just making fun of you, but I also didn't know. All right. The most effective tweezers have the following characteristics. Now, it's important to know this. The first candlestick is the same as the overall trend. All right. That's the first characteristics of tweezer bottoms or tweezer tops. The first candlestick is usually, all right, is this not usually is the same as the overall trend. So it means if we are in a downtrend, the first candlestick will be a bearish candlestick. All right, and then if it's a uptrend, the first candlestick will be a bullish candlestick. All right. Are we together? The second candlestick is the opposite of the overall trend. Now, the second candlestick, if we were in a downtrend, the second candlestick will be a bullish candlestick, and if we are in an uptrend, the second candlestick will be a bearish candlestick. Now, this is important to note. If you find two of the same color, it's not really a tweezer, but if it's the first candlestick is the same as the direction of the trend and the second candlestick is the opposite, then you know we now have a tweezer. Those are the first characteristics. The shadow of the candlestick should be equal or near equal. These shadows or the tails should be near or the same length. Are we together? They should be the same length or near equal, just by maybe 1 or 2 pips. All right. And the tweezer tops and the tweezer bottoms should have the same highs and the same lows. So they should have the same highs and the same lows. Those are the rules or the characteristics of tweezer bottoms and tweezer tops. The first one is that the first candlestick is the same as the overall trend. The second one is the opposite. Number 3 is that the wicks are the same length or near the same length. All right. And number 4 is that they should have the same highs and the same lows. And that's what we now call a tweezer bottom and a tweezer top. All right. And they signal a reversal, and they usually happen at a support or a resistance area. Now let's move on to triple candlestick patterns. These are my favorites. These are my favorites. If you understand tweezer tops and tweezer bottoms, can I please get some fire emojis? Can I please get some fire emojis? Can I get some dollar emojis in the comment section? All right. Now let's go to triple candlestick patterns. All right. Now some 3 candlestick patterns are reversal patterns, and other candlestick three candlestick patterns are continuation patterns, which signal a pause, then a continuation of the current trend. Now these ones, it's important to know that they are dual. It can either be a reversal or it can be a continuation depending on where it happens. Now the popular triple candlestick patterns are the evening and the morning star, the 3 white soldiers and the black crows, the 3 inside up and the 3 inside down. Evening and morning star, 3 white soldiers and the black crows, 3 inside up and 3 inside down. All right, now let's start with the evening and the morning star. Start with the evening and the morning star. The morning star and the evening star are triple candlestick patterns that you can usually find at the end of a trend. They are reversal patterns that can be recognized through 3 characteristics. All right, we'll use the evening star, we'll use the evening star on the right as an example of what you may see. All right, we're going to use this one. It's pretty much the same thing. The rules are just the opposite. The first candlestick is a bullish candlestick. So the first candlestick is the direction of the trend. If we see in the morning star, the first candlestick is a bearish, so it is that in the direction of the trend. All right, the second candlestick has a small body, all right, indicating that there could be some indecision in the market. This can be either a bullish or a bearish. The second candlestick will be a small body. So it has a high and a low and a very small body. It's like there is an indecision between buyers and sellers. All right. They both tried to come into the market, but they were 50-50. So there was an indecision, still deciding if they are going up to buy the market or they are selling the market. All right. The third candlestick acts as a confirmation that a reversal is in place as the candlestick closes beyond the midpoint of the first candlestick. So we have the first candlestick, which is a bullish. The second one has a small body indicating an indecision. The most important candlestick is this one. It needs to close below the midpoint of the first candlestick. It doesn't have to close below the open, but it needs to close below the midpoint. That is the confirmation that now we have a reversal. Now, when we have that and it happened at a resistance area, we can go in and take our and execute our trade. The morning star is the opposite. The first candlestick is a bullish. We still have an indecision in the market, and then we have the bullish candlestick closing above the midpoint of the first candlestick, and there you have your evening star and your morning star patterns. Do you understand? Now let's move to the 3 white soldiers and the 3 black crows. These are my favorite because this pattern is formed when 3 long bullish candlesticks follow a downtrend signaling a reversal pattern. 3 white soldiers, you have 3 long bullish candlesticks that signal a reversal. This is in your face. This is right in your face, all right? The first of the 3 soldiers is called the reversal candlestick. This candle is called the reversal candlestick. As you can see, there's also a bit of an engulfing, a bullish engulfing, all right? As you can see that, all right? It either ends the downtrend or implies the period of consolidation that followed the downtrend is over, all right? For the 3 white soldiers pattern to be considered valid, the second candlestick should be bigger than the previous candlestick body. This candlestick needs to be bigger than this one. Also, the second candlestick should close near its high, leaving a small or a non-existent upper wick. This candlestick needs to close near its high. It should either have no shadow or have a very small shadow. All right, for the 3 white soldier pattern to be completed, the last candlestick should be at least the same size as the second candlestick and have a small or no shadow. This one needs to be the same size as this or bigger, and it needs to have at least a small or no shadow at all. This is what we call the 3 white soldiers. All right, the 3 white soldiers. This is a in your face, we are now buying. It's a in your face, we are now buying. Whenever you see this, go in, go in, go in, go in. All right, then I can see those fire emojis. You can send me those screenshots of the profits. All right, and then we have the 3 black crows, which is now the opposite of the 3 white soldiers. The 3 black crows happens in an uptrend. The first candlestick obviously is our reversal candlestick, which also engulfs the previous candlestick, as you can see that. The second candlestick needs to be bigger than this, and it needs to close near its high or have no shadow at all. The third candlestick needs to be the same size or bigger than the second candlestick, and it needs to have just a small shadow or no shadow at all. And this happens in an uptrend in a resistance area, and this signals a reversal that the sellers are now in. We can now stack up those cells. Are we together? Are we together? Do we understand this? Do we understand? If you do understand, please let's send those fire emojis. Let's send those fire emojis. Let's send those money. All right, this is another one of my favorite candlestick pattern, triple candlestick pattern, the 3 inside up and the 3 inside down. All right, this formation is a trend reversal pattern that is found at the 3 inside up. It's found in a downtrend. This candlestick pattern indicates that the downtrend is over and a new uptrend has started. Now, for a valid 3 inside up candlestick formation, look for these properties. The first candlestick should be found at the bottom of a downtrend and is characterized by a long bearish candlestick. The first candlestick takes the direction of the trend and it's long, all right? The second candlestick should at least make up all the way to the midpoint or just above of the first candlestick, all right? The second candlestick should be above the midpoint or at the midpoint of the first candlestick. All right, the third candlestick needs to close above the first candlestick's high to confirm that buyers have overpowered the strength of the downtrend. We have the first candlestick as a long bearish candlestick. The second candlestick is a bullish candlestick that closes at the midpoint or just above the midpoint of the long bearish candlestick. And the third candlestick should be a bullish candlestick that closes above the open or above the high of the first bearish candlestick to signal that the buyers have now entered the market. The bulls have entered the market. All right. Are we together? That when you see this candlestick, it is a confirmation that you should be entering your buys. As you can see, the market just tried to go down a bit, and immediately after that we shot all the way up. Now the 3 inside up is the opposite of that. It happens in an uptrend. We have the first long bullish candlestick going up. The second candlestick should close at the midpoint or below the midpoint of the first candlestick, and the third candlestick needs to close below the high, below the low of the first candlestick. All right, as we can see, that candlestick closed below the low of that candlestick, and then you can now execute your sell positions. All right, are we together? Are we all good? Do we understand that? All right, now let's quickly go into our charts and let us see if we can identify any of these candlesticks. All right, just by opening this already, I already see an engulfing candlestick pattern, a dual candlestick pattern. We have an engulfing over there. This was in a downtrend. The market engulfed. This candlestick engulfed that one, and the market shot all the way up. You already see that. Now let's see if we can find another we can identify another we can identify another candlestick pattern. So we have that one there. We have the shooting star over here. See, we have the shooting star over there. All right, you guys see that? We have the shooting star over there. Let's look at we have the the 3 inside down over here. See how easy they are to spot. We have the first bullish candlestick, this one closing below the midpoints, and then this one also closing below the low of the first candlestick, and then boom, the market shot all the way down. Right. Let me see if we have another. Okay, there's another bearish engulfing candlestick. You see another bearish engulfing candlestick, right? There's another bearish engulfing there. Remember, I told you the bearish engulfing is quite common. It's quite common. You'll see it often, and whenever you see it, usually the market will shoot all the way up. Will shoot all the way down or all the way up, depending on where you get it. All right. Do you guys understand that? Do you guys see what we look out for? I'm trying to see if I can find another, maybe let me see if I can find something. Do you guys understand? Do you guys understand any of this? Do you guys understand any of this? Okay, we have about 10 minutes left. Let's just quickly dive down into into the key levels. Let's dive down into the key levels. Let's quickly, but I believe you guys see what I mean. We'll get to that when I combine it with the key levels, so you can see what to look out for. If you do get that, if you see now how to spot them on your if you see how to spot them on your chart, please give me some fire emojis. Please give me some fire emojis, some cash emojis. Let's get rolling. All right, now let's talk understanding key levels. All right, we're going to discuss what are round numbers, why do round numbers work, how to use round numbers as your support and resistance, and how to use them. All right, now round numbers, the roundest number of all is 0. So this is how you make it simple. Just look at double zeros, look at triple zeros. Let me quickly go on the chart so I can show you where to look for them. As we all know, this is time and date, and here is price. Price is the most important thing that we look at when we're dealing with round numbers. All right, double zeros and triple zeros. If you, for instance, if you're looking at, you see, you want to look at where price, the market gives you prices. As you can see, we have 14,800. It's double zeros. You have double zeros at the end. You have double zeros. Or you want to look at something like 15,000. Let me just do that. So 15,000 will be now triple zeros. All right. This is what I mean when I say double zeros and triple zeros. Just literally just think of it. So I'm just gonna put 14,900. All right, 14,900 is our double zeros, as you can see, the double zero, and then 15,000 is our triple zeros. That's what we mean when we say double zeros. We mean the price of that particular instrument. All right, these levels are of particular interest because especially the biggest traders in the market, they tend to place their orders near these prices. All right, traders or market makers, or what we refer to as the big whales, they tend to put their orders near these prices, at the double zeros or the triple zeros. As you can see over here on different instruments, an example of double zeros on Nasdaq will have like 11,200. On Dow Jones will have like 34,700 as double zero, as I've already showed you. On Euro USD you have something like 1.1400. On USD JPY you'll have something like 1.400. An example of triple zeros on Nasdaq will have like 12,000. On Dow Jones will have like 33,000. Euro USD will have like 1.2 thousand. Some traders will also look at the midpoints between RB numbers known as 50s. 50s are single zeros. All right, so 10s, 20, 30, 40, 50, 60, 70, 80, 90. And then we have hundreds, 100, 200, 300, 400, 500, 600, 800, 900. And we have thousands, 1,000, 2,000, 3,000, and so forth. And that is the price. Now you will notice as I show you that whenever you place your horizontal line near these prices, you see that there is usually activity, either a reversal or a break and a retest of that particular price, which tells you that market makers or the big whales in the market usually have their eye on these prices. And I'll explain to you why now. Let's quickly go into the chart. As I've already, remember, I just plotted 14,900. See what happened exactly at 14,900, and you see how our reversal pattern, our reversal candlestick shooting star rejected exactly that price. Also here we have our bearish engulfing right exactly at this price, where we have the bullish candlestick engulfing, the bearish candlestick engulfing the bullish candlestick right over there, exactly at that price, giving you a confirmation that the market is now going down. Look at there, the market broke and it tested that area. All right, now we're gonna place more horizontal lines starting from the bottom here. Let's look at where our nearest double zeros will be. So let's place at 14,400. All right, we're gonna place at 14,400. Let's zoom out a bit. Okay, well, didn't go as planned right there. It means it's, so we're gonna place 14,500. So I'm gonna show you something. 14,500. Right, see what happened there, right on that. Please zoom in a bit. I can't see. I'll zoom in just now. So I just want to plot this number so you can see. Now let's go 14,600. Let's go 14,600. All right, let's go 14,700. Let's go 14,700. 14,700. Now let's go 14,800. Just by not even looking at the chart, but just placing these based on your based on price and your double zeros and your triple zeros, see what happens. So we have 14,500, we have 14,600, we have 14,700, 14,800, 14,900, and 15,000. See what happens there. The market has been coming down, gave us a reversal pattern right on our price. All right. See what happens there. There's an activity at 14,600. See what happens at 14,700. See what happened at 14,800. See what's happening at 14,900. Even if we go into history, look at that. See what happens. There's usually big activities happening at these prices. There's usually an activity. We have an inverse head and shoulder right at our, between two RB numbers, or between our double zeros. See that? Look at that. We can even add more and say 15,100. No man. We can do 15,100. All right, 15,100. 15,200. See, look at that. Look at that. Look at that. Just look at that. All right. We can do 15. Yeah, man. We can do 15,300. 15,300. Look at that. Look at that. So you see where you can get your entries based on just using these key levels. Just look at that. Whenever market reaches these key levels, there's usually activity. Even if I can just look at the top there and just put it there, I can already see what's my nearest. We can do 500. Look at that. Exactly here, that's where a reversal was. Look at that. Look at that. Let's do 600. Let's do 600. Look at that. Now you see this in combination with the candlestick that we've discussed. Look at that. The market reached your key levels there, gave you a bearish engulfing. What did the market do? Shot all the way down. All right. See here, gave us near this zone here. This is a very we will discuss zone in another. So look at this zone. It's between two round numbers. You see, it's a strong zone. The market has been rejecting this zone. But where is this zone happening? Right between two of our RB numbers. So in conjunction with the with the confluence with the zone and the candlestick patterns, we can get nice entries. So we have three candlestick reversal patterns over there. Just look at that. How you will catch those sniper entries at these key levels. Does it make sense for you? If it makes sense, please give me what? Give me the fire emojis and the money emojis if you understand what these key levels are about. Literally is just your round numbers, your zeros, your double zeros, and your triple zeros. Firstly, how to use these ones, what you need to understand is how trends work, how support and resistance work, candlestick patterns. So if you have a clear understanding of these three things, you are able to use this to catch your entries. First, you need to identify your trend. Where is the market going? The market is going down. So we are in a downtrend. So I should be looking for selling opportunities. All right. The market is going down. Where do I get my entries? You look at your entries at these key levels. You wait for a break, or you wait for a break and a retest to that particular level, and you execute that particular trade in the direction of your trend. It's as simple as that. Forex simplified. Do you have any questions before I close today's session? All right, just because of time, we won't have time to look at opportunities in the market. But again, you can try this on any currency pair. You can try this on any currency pair or on any indice and see how it works out for you. Let's look at 38. This is Dow Jones. Let's look at 33,800. Look at that. Look at that. Look at that over there. Let's look at 33. Let's look at 33,300. Look at that. All right, and what do we have here? We have an engulfing candlestick right on our key level. Do you see that? Let's look at 33,500. Look at that. Look at that. Look at that. Market always react to these prices. When will you be doing another session? We have another session next week, Monday, 7 p.m. Central African time, next week, Monday. So please make sure that you do join that. All right. So guys, that's it from me for today. Please practice on this. So next time when we discuss, you at least have an idea of what we're talking about. Again, like I said, if you are not in the Telegram channel, make sure that you are in the Telegram channel. We'll be sending more educational content in there. We'll be sending more signals in there, and let's trade the trades together. All right. So now you know how you can catch those sniper entries using a confluence of the key levels and the candlestick patterns. You can use the look at that, man. I love just how these things are just right in your face. Look at that. This is a bearish engulfing right at our key level. And then what did the market do? Go all the way down. Look at that. That's 800. That's 300 pips going all the way down on Dow Jones. Now you know how much money that is. Gang, gang. It's gang, gang. All right. It's gang, gang, if you know what I mean. So give me some fire emojis, give me some fire emojis, give me some dollar emojis in the comment section. Again, thank you guys so much for joining me today. As I said, we won't get too much into other details as I've already described them. So as I promised you guys, we have our promo code, which is Isaac Edu. All right, you use this promo code that is valid until the 31st of October 2023, and it can only be used once. Whenever you deposit, use this code to activate your 100% trading bonus. Your 100% trading bonus. Isaac EDU, and then you will get your 100% deposit bonus, first time deposit bonus, and it can only be used once by one person. All right, guys, that's it from me today. It was great engaging with you guys. You guys are amazing. You guys are literally just amazing, man. I love the interaction. I love the fire emojis. I love the money emojis. I wish you guys all the best for this coming week. It has been Monday, first day of the week. We had, over 150 pips and profit on our Nasdaq trade. All right, and what's your channel on Telegram channel? If you can scroll up, the link was sent here. Let me see if I can copy it, if I can ask the moderator to just send us the link again, so you guys. Why is there no audio sound? There is audio. I believe other people do hear me. All right. So again, thank you for your participation. Thank you guys for joining me today. I really appreciate it. I hope you guys had great fun. Hope you guys learned something new. I see Rita says great class. Thank you. So thank you for joining me, guys. How long have you been in the market? I did say in the beginning, I've been trading for 10 years. This is my 10th year in trading. All right. So yes, I will see you guys next week. next week, Monday, 7 p.m. same time here on YouTube. Make sure that you do not miss out on that. Again, please make sure you are part of the Telegram channel. Let's profit together. There's fire signals being sent in there. You don't want to miss out on them. All right, so make sure that you join the Telegram channel. There's also educational content. We also do psychology tips. Man, it's just out of this world. So again, thank you guys for joining me this evening. I hope you guys have a great evening, and I will see you guys next week, Monday. I pray and I hope that you have a profitable week. I love you guys so much. Thanks to Octa for Octa Broker for making this possible for you and I, so we get to engage, we get to learn, and yes, wishing you all the best. I pray that you be favored. I pray that you be blessed this week, and I pray that you be profitable. Remember, I love you, God loves you, and Jesus loves you. That's it from me, guys, and I am outie.